Well then, it's 3 p.m. We now commence with the webinar.
Yeah.
So good evening, ladies and gentlemen. In these times of heightened risk and uncertainty, where the world is on the verge of facing another financial and economic crisis since 2008, let's hear it directly from our experts on how to sail through this financial crisis. HRAI welcomes you all to our next HRAI session, Settle the Unsettled, Financial and Economic Disruption. Before we begin with this session, I will take a few minutes, ladies and gentlemen, to run you through some of the guidelines while on Zoom. It is very important to follow these guidelines in order to have an effective session. 3 guidelines that I would like to take you through. Request all of you to please keep your Zoom audios on mute and your videos switched on. Please use your full name as your screen name and not your device name, as it doesn't allow us to identify who you are. As your video is off and your name is not mentioned, we will have to move those participants to the waiting room for security reasons. So please cooperate. It would be great to have all the participants' feedback. We will be running a poll before the start of the QA session. Request all participants to kindly give your feedback on the session. HRAI is a non-profit organization and a body established to enable community members to explore, discuss, and understand the current scenarios. This team works primarily on getting subject matter experts together to share their knowledge and provide real-time strategic solutions covering all aspects of HR and other business enabling services. I now take the privilege to introduce our esteemed panel members. To begin with, our first panel member, Mr. A.S. Narayanan, founder and CEO, Mextra. He comes with an immense experience of 20 years into sales and marketing, and he has a passion for sales and technology. Before starting his own venture, Mr. Narayanan was the Chief Distribution Officer of Bajaj Allianz Life Insurance Company. As a CDO, he had handled a business volume of over 5,000 crores of premium annually. He is credited with building India's largest non-agency distribution channel during his tenure at Bajaj Allianz. Prior to Bajaj Allianz, he worked with HDFC Standard Life, Thomas Reuters, HCL, and TCS. Narayanan is a qualified computer engineer and MBA from FMS Delhi. He is a talented chess player and has represented his college and university in chess. Thank you, sir, for accepting our request and being part of this session.
Thank you.
Our next panel member, Mr. Mani Padmanabhan, Director, Vanman Management Advisors Private Limited and partner, Peachtree Management Advisors. He is a multi-domain finance and people leader with 3 decades of experience in large Indian and US listed entities and a virtual CFO advisor. He is also an author, writer, and trainer. He is a life fellow member at Institute of Directors. He is a virtual CFO and a trusted business partner and offers strategic finance services, corporate governance advisory, and board services. He has led business restructuring, post-merger and acquisition, designed and strengthened governance frameworks and programs, created innovative fundings structure, giving operating flexibility, generated huge cash savings from innovative tax position, and has been a people leader. Thank you, sir, for accepting our request and being part of this session.
Completely my pleasure. Thanks.
Our next panel member, Mr. Ritesh Verma, Vice President, India Delivery Lead, Financial Service at Quinox. Ritesh comes with over 22 years of diverse IT experience. He has delivered projects mainly for financial service clients across the globe. In his present responsibility as Vice President, India Delivery Lead, Financial Service at Quinox, he is responsible for financial service technology delivery across capital markets, insurance, and banking. Manage and develop client relationship and industry domain. His earlier responsibility and organization includes Program Manager in Deloitte, Senior Director in Capgemini, Vice President in Accenture, along with experiences in Satyam and Tata Group. He has started up providing consulting services and developed product in industrial Internet of Things. He has been a panel and speaker at esteemed forums including industry and academia meets. Thank you, sir, for accepting our request and being part of this session.
Thanks, pleasure is mine.
Now I'll introduce our panelist and moderator for today's event, Mr. Sinchayan Paul, co-founder, Karya Mitra. He comes with an experience of 20 years in HR and management consulting. He is a co-founder of the job tech platform Karya Mitra that enables enterprises to intelligently skill, assess, and hire their frontline and entry-level workforce. Prior to starting up, he worked for Vodafone, where his last role was Senior Vice President, Total Rewards and Recognition Design. Prior to Vodafone, he worked with PwC, Thomson Reuters, and Reliance. He is an alumni of Hindu College, Delhi, and XLRI, Jamshedpur. Without taking much time, I would now request Mr. Sinchayan Paul to take over this session. Over to you, Mr. Sinchayan.
Thank you, Peter, and
Thanks.
happy to be here. And a very, very warm welcome to everybody who's participating and the full set of audience who's there on the screen today, and especially to my three co-panelists, which is Narayanan, Ritesh, and Mani. So to introduce the topic, I would like to refer to two messages I started getting in March when the lockdown came in. One message, a slightly ominous one, said that more people would kind of suffer and might die out of the financial crisis than out of the virus. And the second one was a more positive one that said, never waste a good crisis. And if you look at it at that point in time, and even now, it's a complete world of uncertainty. The VUCA world, as one of the participants who's asked a question, is really playing out with the growth trajectory of the virus, completely unknown. There's no remedy, so you don't know what's going to happen. You don't know how companies will react with their employees, with their customers, with their vendors. So it's a complete world of uncertainty right now. And experts are saying that each month, the global GDP growth is reducing by about 2%. So it's almost about a 6% reduction in a GDP growth worldwide, if you were to look at 3 months or a quarter, as we were saying earlier. With that context, I'll also like to talk about a Chinese word, and Chinese people are hated nowadays, but there's a Chinese word called Wei He. And Wei He is basically a crisis. And that word Wei He is divided into two parts, Wei and He, which talks about danger and opportunity. So the Chinese word for crisis combines both danger and opportunity. And with that in mind, let me begin with Narayanan and ask him on his very broad view on what's going on from a financial point of view. Where does he see is the path to recovery? Is it a L-shaped curve? Is it a U-shaped curve? How does he see Narayanan?
Yeah, so I'll speak a little bit more about India than global, because I think the context is more of an Indian audience. So if you take India's GDP broadly, it's at about 3.2 billion US dollars for the year 1919-20, and we had a GDP growth of about 4.2%. If you look at most forecasts for the year 2021, we are forecasted to degrow, that is contract the economy, anywhere between 3 to 6%, depending on whose estimates you take. So if you take Asian Development Bank's estimates, it's about 4% contraction that we are going to have in GDP, which sounds small but is ominous. And we currently are at an unemployment rate of about 11.5%, and which is pretty significant, which again may sound small but is significant. There are three major sectors to India's GDP, as all of you know. There is services, there is manufacturing, and there is agriculture. So if we look at services, if I roughly look at it, about 61% of India's GDP comes from services, out of which IT is an important constituent. And I believe a lot of the audience does come from that sector. About 23% is manufacturing, and about 15 to 16% is agriculture. Of this, agriculture is the least impacted. Okay, and there are a number of things. If we look ahead. What do we need to do to tackle this financial crisis? The medical part of it, we are addressing. There's a limited amount of lockdown that we can continue to do. We are doing the social distancing, sanitizing, mask bit, by and large, I mean, obviously. And the virus will have its growth trajectory on which we have little control. And we hope that the healthcare professionals and the pharma companies in the world will be able to come out with some good medical alternatives and some vaccines in the near future. But till then, if we look at the sectors that we have, I'll take manufacturing first. I'll just spend a little bit of time on it. In the short time, we have seen that India can actually manufacture at scale pretty quickly. One example would be PPEs, sanitizing, agents. We have been pretty quick to go from zero to significant volumes in manufacturing. One of the challenges that we have in manufacturing is that we are largely reliant on China, which imports around $80 billion to India, and we export about $25 billion of goods to China. And obviously, there is a situation with China. I see that as a huge opportunity. So one of the things that in the manufacturing sector, India really needs to look at is what we can manufacture in the short term, what we can manufacture in the medium term. And when I say medium term, I mean 2 to 3 years. And what do we do in the longer term, which I would put as 3 to 10 years. And accordingly put things like countervailing duty, etc. on Chinese goods, on the things that we can manufacture short term. For example, there's no reason why we can't manufacture an electric bulb, but today we import most of it from China. There's no reason we can't manufacture a toy, but we import most of it from China because it's 20-25% cheaper. But just by levying duties and suffering a little bit of pain, we will incentivize domestic manufacturing and consumption. One huge advantage India has is the population and domestic consumption. Coming to services and IT in particular, which constitutes about 5.6% of India's GDP, and IT industry is about $180 billion worth, out of which 140 billion is pure exports. I look at it as a huge opportunity because people would want to digitize and digitize at scale. I mean, this unfortunate pandemic has made it clear for every industry that it needs to digitize. It needs to reach the customer's laptop, iPad, and the phone in whatever manner. And I think broadly, India is very strong at IT. We are the third largest producer of IT services in the world. We have the capability, we have the technology to train, to develop. We are into all sectors of IT industry now, services, products, artificial intelligence. I see a huge opportunity for us to go global and help various businesses, including small, medium-sized businesses across the globe, digitize, productize their offerings, and that's a huge growth opportunity. One of the things that IT needs to look more and more is make variable or a SaaS model, where the IT costs are linked to the growth and the sales that the company does. If that can be done, because everybody's looking to curtail costs or make it variable more than curtail costs. They want to make it variable in proportion to their growth. That's a huge opportunity for us. I would not spend much time on agriculture, but there is huge opportunity. We are one of the lowest in per acre of yield productivity. India is one of the lowest, and there's huge opportunities to modernize that field with technology. So while this has been a challenge, I think it's opened our eyes. I will tell you one thing, that June, the recovery has been better than forecasted. I can say that if we play our cards well in the next 3 to 5 years, this could be a time that India really turns around in all three sectors, and it could be a good time for us. I'll stop at that.
Great. Thank you, Narayanan. And your ability to remember numbers, both in terms of volumes and percentages, hasn't gone down. So a very positive note to start with. And I think Narayanan very beautifully broke it up into the three sectors. So pain in the short term is what he said, and our ability to do more localized manufacturing, bring supply chains closer, focus on digitization, IT to focus on SaaS models rather than pure body shopping kind of outsourcing jobs. So that's brilliant. Let's move on to money now. And we have been in country of planners. Interview questions are asked around how do you see yourself 5 years down the line. But every kind of plan anybody made, forget 5 years before, but even in February has now been a washout. As a finance professional, what are your thoughts on business planning? Is business planning dead? Is it irrelevant now? What's the future about business and financial planning, Mani?
Sure. So thanks, and once again, very happy to be here and share whatever thoughts I have. But having said that, in fact, I was mentioning this yesterday in a Thai forum also. Whatever we are saying, or rather, I am saying, sorry, is a very generalized view, may not apply to a particular company, which will be more bespoke advisory. So it is more my views based on my experience with the companies that I advise, and plus my corporate experience also. Coming quickly to the point, um, let me congratulate you on the question. And I was smiling when you asked, because in every narrative that is there on COVID, there are only two things which are talked of. Other things are also talked of, but the two crisis things are talked of. One is, which is actually talked of a lot, is cash management. How do we manage? How do you extend runaway for cash? How do you make most of what's available? So that's one roundabout question, which receivable cash, everything, working capital. And the second is exactly what you said. How do we prepare for the downturn, and how do we therefore be realistic in our estimates for the immediate future? So coming to your question on is planning important, I think it's the other way around. I think planning has never been more important. Let me put it that way. When I say that, I don't mean the long range planning, because honestly, when you are in a situation with, by the way, we are, I think, close to celebrating 1 quarter of lockdown. So we are in a situation like this. Obviously, the mood, the business mindset, business orientation will be to focus more, and that's understandable. Focus more on what is near and imminent, right? And near and imminent is defined as anything from 6 to 9 months. So my first strong point on this, which I share with most companies, which I believe is universally applicable, is do a realistic planning, tear to shreds whatever you have prepared earlier, even if it is as recent as February 2020 or the beginning of March 2020 also, and really look at things the way it is right now and what you really believe is the realistic demand for your products for the next 6 to 9 months. However, let me say that it's not just doomsday, and I like the way you started by saying that there is a positive to things. Crisis presents opportunities and all that. Of course, you used some other phrase. It is not that it's only bad, and I can give you many examples. Few are coming to my mind, but I'll not use that now. There are companies who have actually hit the other way, who upped the ante. We are advising a company which is an IoT startup, and actually not a startup. Sorry, it's a funded startup. So we keep using that word, and they are actually experiencing a huge surge. So it's the other way around. EdTech, another great industry. So when you use the word replanning, it is not just one way. It is not down way. It can be up also. It need not be southwards. It can be northwards also. Point is reassess. What the business has in store for you, or the market has in store for you, not the business actually. What the market has in store for you, what the customers have in store for you, and then reassess the planning. That's one very, very short answer. And focus, I think, a little more on the immediate, because no need at this point of time to talk of a long range planning, what is going to happen after 5 years, the kind of interview questions which you mentioned. And I and Sanchayan worked in a company which believed a lot on long range planning, which I also essentially believe is the right thing to do. But I think this is a time to, that doesn't mean be tactical, but this is certainly a time to be very, very focused on what's near and immediate, and be resourced. So I'll give an analogy, and then I'll kind of hand it back to you, because some of these points I'll amplify maybe in some other questions if you have. When your car, and I'm actually picking this example from a friend, and I thanked him when he used it. I said, I really like your analogy, and I'll use it. He said, okay. So it's like this. Let's say I keep my car parked for 3 months, because we are close to 3 months, right? And on the 91st day, I try to start the car. Not always will it start immediately, right? it will, maybe the tires would have deflated by then, the battery would have kind of drained out, and so many other things, So the businesses have to take that into consideration also, that it's not like a switch back, that suddenly at the end of lockdown, everything is normal again. Suddenly you'll find huge crowd once again. There will be a phased out effect. That's also what Narayan said in the beginning. Of course, he said that more as an opportunity, because there is a behavioral pattern shift. And in fact, I was talking to a university. They are actually saying that with COVID, after that, what they are looking at is, can we do an education in a different way? We're actually talking about not only distance classes, more batches, fewer students. That's one. He was also saying that we are giving the students now an option, which could be a permanent feature of actually doing, they call it synchronous classes live, and with an option to do asynchronous also. So I think these kind of things the businesses have to keep in mind and look at adjacencies, while doing another short-term or business planning or forecasting. Look at adjacencies. Maybe the way you were doing, I used this education example. There are plenty of other examples. You may not exactly be able to do the business the same way. So factor in that also.
Thanks, Mani.
Yeah.
Well said. And so business planning is not dead. What's dead is the earlier plan that you had made for your business. Be resourced, be very close to the market and try to understand what's happening there. And don't try to start your car after 3 months. Go and check what's happening. So
you start the car after 3 months, but please keep checking during this 3 months and ensure that it starts after 3 months.
That's right. So
that's the point. Yeah.
Brilliant advice from Mani. I will move on to Ritesh. Ritesh, you're from a mid-sized IT services firm called Quinox. So we would like to know from you, how's Quinox as a company responding to the financial and economic disruption? What are your learnings from Quinox and your other competitors, similar companies? What's your broader learning, Ritesh?
Sure, Sanjayan. So in Quinox, the best thing which happened is that we had a very visionary CEO, Mr. Anil Kumar. So even before the lockdown started, 2 weeks before that, we anticipated, and in our disaster recovery mode, the whole organization went into work from home mode. Wow. Now that gave us some kind of runway when the actual runway started, actual lockdown started, and we were quite equipped with the remote working. Then we segregated our focus into 3 parts. First was customer, and all of this focus got cascaded down. So customer focus, technology focus, and people focus. So when it was customer focus, we defined the goals and sharp focus areas. So we predicted that the customer intelligence will be most important predictor of the revenue growth and profitability. So we adopted with the customer changing requirements. Now that landed us on some of the niche and customer requirements in a new areas like neo-banking, digital account opening. So most of the customers in financial services and others, if you see, none of us would have imagined earlier to launch our own banks. But right now, in place like UK, if you follow some regulations, it's a 2-day work, and in a neo-banking, a person can start the banking system. So that is where we entered into. That cascaded down to the technology, because coming closer to the customer needs required evolution and adaptation to the changing technology which customer wanted to have their projects on. And it was in a very agile mode, and the timing was very less of the final deliverable. So we adapted to the technology change for the strength to succeed. The architecture to connect anything, anywhere very seamlessly, taking the SaaS beyond cloud and adopting robotics and AI, because most of the banks right now, if you have seen the news, HDFC had the highest digital account opening in last 3 months in their history. So these things are driving. And while we see that the on-premise solutions and we anticipated that the on-premise solution and database has some limitations. So the customers will go into cloud and big data. Now that, and the most important part was cyber security. And we ensured that the cyber security is taken care when we went partnered along with the customer's transformation journey. The next part was people. So while there were people, our colleagues in the organization who had right kind of knowledge, but we tried to impart the advanced learning where we encouraged certifications and learning into cloud and DevOps with some kind of budget which we had, and with those kind of sponsorship, we motivated people, be in touch, being regular touch, and then what happened is that we had phenomenal number of people who are now cloud certified and DevOps certified. So those kind of certifications and knowledge helped building technology stack of the organization, and that gave our customers the confidence to give us more work and partner with us into the new digital mainstream. So that's how we managed it, Sanchayan.
Brilliant. I think you touched upon two very interesting aspects of staying very close to the customer and then adopting your technology to what are the needs, and staying very close to your employees and ensuring that they're skilled enough to respond to the changing technology and the customer needs.
Sure.
Very interesting to listen from you that the HDFC had the highest number of digital bank account openings in this period. So that's a huge amount of acceleration towards digitization.
Sure.
And I can very closely relate to you. We are a very, very small HR tech company, but that's what we did. We kind of right-shifted our expenses. And we left-shifted our product development in the timeline. So we focused on product development and tried to conserve cash. So that's what we did as a company. I will now circle back into Narayanan. Narayanan is somebody who's, as we heard from Peter, he's worked in very large organizations, Bajaj Alliance, Thomson Reuters, and now leads his own startup. And of course, in that role, he's dealing with different organizations of different sizes. So Narayanan, we can't have a single size fits all approach if you come to financial approach for companies. So if we were to know, what are those 2 or 3 key differences between a small startup to a medium organization, let's say IT services, for example, and a very, very large corporation, which could be a Bajaj or a Reliance. So how do you see it as a person who takes a look from the top?
So the way I look at it, obviously, strategy would differ by size and also the kind of industry you're in and your particular cash flow situation. If you look at most businesses, they get killed due to cash flow issues. I mean, bottom line, right? Whether large, small, or medium. But the way one would look at it is that at this time, if one were operating a large company, let's say a large insurance company like I run or any other large scale company, then the difference is that large scale companies typically tend to have a large cost base, right? So if you have a large set of employees, you have real estate, you have manufacturing, there are certain large fixed costs. And then if you're locked down and you don't have cash flow, actually the size can go against you and kill you very fast, right? So one thing that large scale companies would have to do is control the cost. And how do you do that? Basically, of course, around real estate, people are already negotiating terms, and there would be some kind of equilibrium that people work with landlords, etc. Around people, I believe that it would be necessary for many organizations, may not be to cut salaries, but to link it to productivity in some manner, making it part fixed and part variable, and link it to productivity. You could also link it in a manner that actually results in a higher salary for the employee, but force them, and in a sense that is necessary, to earn it out of the revenues that the company generates, because it's in everybody's interest, including the employees, to rather take a shorter term pain rather than a company closing down. And many companies, I don't want to name, have gone down, and everybody losing their job. So that's the way I look at a large company. Obviously, if it's in an industry which is scaling up, like healthcare, if you're in a large company in a large space which is probably going to grow, then you don't have this problem. But if you have this problem, I think one would have to variabilize costs, control the cost, and then link it to productivity, at least till the period that things stabilize. For small to medium sized companies, the issue is more around adaptability of the business model, especially if it's funded. So the pre-COVID and post-COVID, the world scenario, it's completely changed. So if you are dependent on face-to-face kind of interactions for business development, or if your product is such that it requires a lot of manufacturing capability, and you have to run plants, then you may be short of workforce, etc. Whereas I'm talking of OEMs, etc., which fall in the MSME segment, then one has to look at the adaptability of a business model. But by and large, for a small, medium-sized company, it will be more about what is the market that you choose to play. So if you have maybe 2 or 3 products, and how best do you sustain your cash flow for a longer period of time, which may be meaning that you cut out certain parts of your organization, sacrifices the essence of any strategy, manage your cash flow so that you have predictable cash flow for the next 1 year, and focus on those products that you can deliver digitally, you can produce, deliver digitally, or manufacture with not too much labor. That is the only way around it. Of course, if you're a tech-based organization which has all technology-led delivery services, again, it could be an opportunity for you to grow. Example, Big Basket, etc. In which case, Amazon and even smaller companies in that space. In which case, of course, you may not have any of these problems. But for larger companies, it'll be more around cost control. In smaller companies, I think it'll be more about adaptability of the business model. And of course, in some cases, your industry and your current situation may be just too difficult to salvage, in which case you need to look at a new startup. Shit happens. Yeah, that's my short answer to it.
Okay. So I take away that sacrifice is the essence of strategy. That's a very nice phrase. Many people also say that you have to be cruel to be kind, because unless you're cruel to a few, you can't be kind to the larger set of people. And that brings me back to Mani. And Mani is somebody who's been involved with startups. He just now said he's also advising funded startups, is involved with HRAI. Mani, what is your advice to startups, both funded and unfunded? And I could take away some learnings from that.
Sure.
On working capital management. How do we manage cash? What options do people like us have?
Okay. This is probably the most, if there is an award for the most asked question, I think this will plainly and squarely go to this question. So, okay, let me contextualize it, since I'm glad you said to startups. But before that, let me just make one point. And I like Narayan's point, which he made on large companies. Let's not believe that the impact is only on small companies. This is a misconception, by the way, which is going around, and I've clarified this yesterday in in fact, take the case of airlines operating for decades, not years, and you mean to say they can't handle 3 months of downturn? It's not that. It's also 3 months of downturn plus what's ahead, So I understand that. So the point I'm trying to make, it's actually size agnostic. It is more sector specific, and the level of preparedness one had. If you go back in time to 2016, when Paytm was a very small company, there were many other wallet companies, and Paytm was not head and shoulders above the rest at that point of time. Okay, but the same opportunity, and so there it affected favored the sector. So it's the other way, the other example, not negatively impacted the sector, but it favored, because demonetization, so how people will pay, how will I pay you 500 rupees? My 500 rupees not getting accepted. So obviously I'll transfer it through a platform, right? But that is the only company which zoomed, which did well. Okay, so the same can happen in negative also. Okay, so that's just one point I wanted to say, because this keeps coming. Since you asked about startups, startups are a little more challenged, particularly particular type of startups. There again, if you are just a bootstrapped company, so it's me and my company, it's me and my table. That's the startup, right? That kind of a company. I'm putting every month some X amount, and I have two guys working on a platform. Unless because of COVID, I don't envisage this product hitting the market ever. If that scenario is removed, if the scenario is, everything is fine, just this 3 months you wear off, then we'll come back. Then I'm actually not affected because I continue doing what I'm doing. I build my product, and then okay, maybe I would have launched tomorrow. Instead of that, I launch 6 months down the line, assuming there is no other cannibalization of that product or service which I offer. I think it's most difficult now that you asked the startups is for the companies which were going for funding, which were kind of set. They already burned everything, put money down the drain, developed a product, and put people, put sales guy, and boom, this hits. So they looked at funding to ramp up and also manage the operations, right? How do you pay salaries? How do you do the marketing and all that? I think they are the maximum impacted, those type of companies. Again, varies with sector to sector. If you are in tours and travels, maybe bad news. But if you are in, I liked Ritesh's example a lot. If you are in a maybe platform company which is benefited or flat, you're probably less impacted. And if you are the kind of company which one advising, is actually got calls from investors, is getting calls every day now. Okay, so aisa bhi hai. So it's not. But they are the ones I feel were most impacted, looking for money. The problem with startups which are received money is the challenge of performance pressure, because suppose Narayan has invested in my company. And at that time I told him, my company is valued at X. But now after your first question, after replanning, I find it is 1/10 of X. So how do I, tough question. So what do I do? Okay, one is give him more equity. That's an easy answer, but it's not that easy, right? So I have to also tell him wait, and things will kind of even out. So the different challenges for different persons. Coming to the specific question on cash management, I'll just try to summarize in the next 40 seconds there. I think the easy answers is which you mentioned. I think you mentioned or Narayan mentioned. I think runaway you need to be very clear, because be sure that you may not get any more funding for this is again a general answer, for the next 6 to 9 months or even 12 months. So the cash planning becomes important. Focus on essentials, and picking a cue from what Ritesh said. Look at adjacencies. So there are two things, and I'll leave with this point. There are two things actually. One is a customer, one is a market. So if I am, one is a market, customer market, and one is a product and service. Yeah. So if I'm a fruit seller and if I'm a tour and travel operator, tomorrow morning I cannot start selling diagnostic kits, right? So that's a complete shift. But if I am a fintech company, I really like that example. Can I broad base my platform to start selling insurances along with, some other payment services? That's the adjacency that I'm talking about. And I'll just leave with this last beautiful example. And I actually learned from that. Yesterday, I was taking a walk in my complex. I saw a new store which has come up. I just went there. It's quite a well-known brand in Hyderabad called CMR, something like a Chennai Silks. Of course, not that big. Chennai Silks is, of course, much bigger. They have actually opened a store within the gated community. Why? So that the customers are not going to walk out anywhere now, right? How do you see families going to do shopping? Do you see that happening in the next 3? I don't. And sitting with a vendor and touching 10 people. So what they have done, they have moved the store to your home, to your complex. So large gated communities will see this happening. What has changed? Nothing. Customer same, product same. The way of serving has differed, right? So these are kind of the adjacencies. So don't get too carried away with cash management. I think take care of the runaway, do what is required, cut costs, cut the non-essentials. But I think focus a lot on the strategy on how you're going to service during COVID and post-COVID.
Wonderful. I think the silk shop example was beautiful because it's not just about exploring adjacent products or adjacent markets. It's about kind of relocating or looking at adjacent locations or geographies in that sense, and then trying to serve your customers. So I think the essence is going to be how do you get your product to deliver cash for you? Of course, you have to conserve cash, but it's not so much about cash as Mani says, but how do you get your product to deliver by looking at different markets, adjacent customers, etc. So I'll come back to Ritesh, and to Ritesh, I'll put two questions into one. The first one is, with financials under strain, I'm assuming, not necessarily for your organization, um, how are people like your organization looking at customer acquisition? Are you spending the same amount of money? Are you looking at different ways to acquire customers? Are organizations looking at dropping standards of customer service, or are there new ways of delivering customer service that's now emerging? And what is your, the second part of the question is what is your expectation from HR? Because there's a large number of HR people on this call at this point in time. What is your expectation from HR?
Sure, sure, Sanjay, and thanks. So coming to the financial strain and spend, I would start with the two global data. One is the global economy is projected, though, to contrast sharply by -3% in 2020, but is projected to grow by 5.8% in 2021. This is the IMF data. That is first. The second is 2 days back, Siemens CEO Cedric Neich mentioned that pandemic has re-emphasized need for innovation. They are not going to reduce spend on R&D. There is a need to have right technology. And just to inform, everyone on R&D, Siemens globally spends more than 5.4 billion euros per year, and they are going to do this. So while there is the strained time, but the customers are looking forward and trying to utilize this time. I'm talking only from the IT customers perspective, because I have a better visibility from there. So if you see, in IT, I will segregate the customers into two. One is new clients, another is existing clients. Now the new clients who are totally focused on neo-banking, RPA, remote productivity assessment, getting blockchains in the financial services banking space to have a tight control on the ledgers, having the cyber security on analytics. These things probably did not come to their mind when they had lots of transactions and they were quite busy, and the situation was normal. But now the client landscape is innovating. Client landscape is changing. So we have to partner very closely with the client, and in that we cannot reduce our IT spend. We have to keep it at par or improve it, because if client wants to go, financial services wants to go for a blockchain, and if we want to partner with them, we need to have people who can deliver in blockchain architects, blockchain developers, blockchain business analysts, blockchain testers, SMEs. So there is no scope of reduction. Either the option is either we do not partner with the client's growing need, or we continue to have equal spend or grow our spend. So our top line, you won't believe, top line has done better in last 2 months, and the gross operating profit has increased than what we had planned at the start of the year as a financial budget forecast. Now for the existing clients, I will tell you, existing clients in the financial services space are almost 90% of the clients are going for Calypso upgrades, FlexCube upgrades, Finacle upgrades, etc. So most of the clients, the Indian banks, the UAE banks, European banks, US banks, insurance, capital markets, all of them, if you see, especially all my clients majorly, and if you see the global news, all of them are going for upgrades, going for the new technology. So there is no scope. If we reduce the IT spend, we will be left behind, because there are other competitors who are spending and who are partnering with the client. So we cannot take that risk, and we don't want to. We want to partner with the clients. And that's, so we are in a comfort zone from that perspective, doing good. Now, coming to your next question on what is the expectation from HR, while we are also doing that, the expectation from HR is just in one word, is over communication. Over communication is the key, because earlier what happened is, then when the people were in office, from their conduct, from their physical presence, people could judge whether this person is going through some kind of problem, some issues, he's feeling low, he's not feeling low. Right now people are at remote places. So when people are at remote places, over communication, managing mental stress, managing well-being, and ensuring that they are quite motivated to do their job properly, they do not have any issues. That's one of the core things which I expect, and I think most of the HRs are doing in their organization. And updates from the business leaders via emails, communication of HR policies, and changing organization policies. For example, if the office opens up with a 20% workforce, I'll tell you a practical example. With the 20% workforce, if tomorrow permission comes for Mumbai, how am I going to select 20% people who are going to be in office? They are spread across projects. So I cannot, if in a 100 people project, if I get 3 people in office, or say 5-10 people in office, that won't serve my purpose. So I think the algorithm which I will use is, when that situation comes, seeing who are the people who are staying closer to office. So those things have to be worked with HR, and then the strategy needs to be charted out. So in one word, it's over communication.
Brilliant. So I think HR folks on this call, you've enough work, and there are lots to do, from workforce planning as offices open up, to communicating. How do you yourself maintain that confidence and calm? And how do you be close to your people when they're far away in their own homes? So big challenges from HR. And staying on that HR topic, coming back to Narayanan, and Narayanan, you're a financial markets expert on the panel. What would you advise HR heads and comp and ben heads in terms of options or instruments that they can look for larger overall, total rewards approach to their employees in terms of incentives, welfare, healthcare? What's your advice, Narayanan?
I would say, if you look at employees, top of mind today would be, of course, if I take it for granted that he's continuing in the company and has some amount of salary, etc. Reward and recognition would be based on performance, which I think I touched upon in the second question. You can incentivize more and make it variable depending on productivity. But there is a very high element of perceived risks today in anybody's mind, right? So there, I will divide that into 2 categories. One is the physical risk of getting the disease, right? One is the physical risk of getting the disease, COVID or anything else, because even due to the overwhelming by COVID of the healthcare, even other diseases are proving difficult to treat. So, and there is a lot of expense involved around it. So certainly a good amount of health insurance, but which looks seriously at 2 aspects, right? One is the mental aspect of it and the well-being of the employees. And how do you do that? So one is, immunity is one of the best ways to counter this or any other disease. So one is to say, I will avoid this disease in any circumstance. Well, fine, you can try and do that, but it is not really in your control. Yeah? You can do the best, but you can still get it. And second is, if I get it, what do I need to counter it? It's my immunity. And immunity comes from physical and mental well-being. And HR plays a very key role in both. So physical well-being would be, certainly when lesser employees are coming, create a space where employees can spend quality time by themselves, do some kind of exercise, de-stress, which will certainly help the physical aspect of it. And from mental aspect, which is very under-ignored, and of course now with one of the actors committing suicide, it came a little bit into public play. But in this kind of lockdown and due to isolation and even being physically separated from your office colleagues and your socializing, mental health is very, very important. I think HR professionals need to pay a lot of attention to mental health of employees. And there are tools for that, which including psychological counseling, games, etc., which actually boost your happiness quotient. There are a lot of things happening in this area. So other than the insurance aspect, protecting, obviously that needs to be analyzed, and you could use any expertise for that, for protecting giving adequate amount of cover from the perspective of a cost. But physical well-being through building immunity, which consists of exercise, and mental well-being, where you support the family counseling through holistic management, through games, through other methodology for socializing, that would go a long way. And I think, while I'm not an HR expert, but these two things are certainly something that HR needs to look at from overall well-being of the employee. And of course, if the employee is de-stressed, is physically in good condition and mentally in good condition, then he's obviously likely to be more productive. Anybody would tell you that, though I can't back it up with my usual numbers and data, but absenteeism and pessimism would reduce by that. Yeah. That's my take on it. I think the mental aspect needs to be looked into, and we as a society and as a country, as a community, we have a certain amount of taboo about a mental condition. We don't have that about a physical condition. So if I were to tell you I have a fracture, you'd say, yeah, that's fine. But if I'm telling you I feel a little low, I feel a little depressed, you say, hey, you need to be mentally strong. But that's not the answer. So you need professional to, I think, guide employees and families through this tough times.
Right. So I'll just add on to that, Narayanan, and you kind of, this time you touched upon a lot of fluffy, non-data kind of stuff. And there was a question also that came in from a lady called Rakhi Haldar around incentives and how do you keep people motivated. I would say that divide it into two parts, or rather three parts. One is short-term needs. Your employees will have certain immediate short-term needs in terms of their cash. Finances permitting, try and see if you can pay them salaries on time, or pay them maybe with a bit of delay. That's ensure that their houses keep running and the stoves keep burning. Second, and building around what Narayanan said, try to build a portfolio of benefits. Those benefits could be you, if you're a large organization, try and negotiate with vendors probably to give a concierge kind of service. Can there be low cost delivery at home, or low cost equipments that you can work out, or broadband deals you can do for your employees? So look at a non-cash kind of a benefit pool. And if your overall organization architecture and culture permits, look at the third thing, where you postpone a certain amount of cash or benefits and convert it into kind of long-term wealth creation. Those could be through ESOPs, or those could be deferred payments, but they get multiplied at a later stage in time. They can be linked to both time and performance. So try and break it up. Immediate cash needs, a portfolio of benefits, which could also have things around mental counseling, people have somebody to go to talk to, that kind of stuff, and also long-term wealth creation. Those would be my advice. I would go on to the last question to the panel from a panel discussion point of view, to money. And I would also add in one of the questions that I'm just getting from one of the participants. So Mani, two questions to you. One is, how do you see HR folks can really partner with their CFOs? CFOs will focus on cost, they'll focus on money. How do HR folks focus on that? And to add on, I'll just add on a question which has come as well, so what are the upcoming business models for entrepreneurs, and what are the 10 things every entrepreneur should take care of? So two questions again.
Okay, I may ask you to just repeat the second question, but I'll take the first one on.
Sure.
And I'll try to keep it short because the last questions are
right.
So first of all, I think I learned something today from Narayan, and I think it's a brilliant point. And today I realized that while so many meetings we talk of cash management, business, how do you jump back, re-strategize? I think the most important asset is the human asset, right? And I think that's an excellent point. I mean, if you don't charge me royalty, I'll mention this point in some of my next speeches. So I'll start with that. how partner with CFO. But let me also say that with one statement which I have always used in life, and I always say this to everybody, that don't be good, be fair. Okay, and cannot be more applicable to HR and finance. Actually, these two functions are probably the two most sector agnostic functions that I can think of, because quality, if you say, it's again dependent on the industry. Quality in pharma is different. It's a little different. It partakes, it becomes specialized. Finance and HR kind of are the two functions which are sector agnostic. Okay, and they're very pure functions in that sense. So therefore, it also becomes important, while all the good things Narayan said, and I completely believe in CNB approaches and all. I think being truthful and being fair is extremely important, because not every company will be as fortunate as our friend Mr. Verma, that they will see a surge, they will go down. So handle that carefully. I think that's one partnership with the CFO and the finance they together have to make, along with business. And business is keenly involved. In fact, I don't think HR and finance should do anything which is unconnected with business or what the business wants. But then sometimes you have to advise them also, what should be, what we believe is right. So in that case, if I wear a finance hat and I'm imagining sitting with an HR guy, the first thing I will look at, definitely the HR person to tell me, is what are the unproductive spends on people. I mean, I would definitely ask that. It may be a hard question, but I think that's something definitely I'll ask. How we handle it is another issue. We have to be fair. We have to, all that is, I'm not going there. Okay, that's one. And this is also a very good time actually to hire. That I was sitting on one panel and where somebody said this is actually a good time to get talent. A lot of people are on the move, and look at maybe some strategic sourcing, which you earlier could not have been done. So look at that. But certainly the biggest force, and I'll be very honest about it, is to sit with a piece of paper and pencil or a pen, and really sit down and see the total employee cost, how you need to do it. Doesn't mean you remove all employees. Various ways, like what Narayan said, maybe outcome based. You can make it output based, and or you can tell some employees to look for, help them get onboarded somewhere else. So I think that's a very, very genuine thing. That's the foremost thing in my opinion. And the earlier point I meant, involve HR. I would like to involve HR if I'm the CFO, along with the business, to see, is our resource, in this case being manpower, getting properly reallocated to the new strategic areas that we talked about, adjacencies we talked about, Ritesh mentioned various new business channels. Probably good time to hire, and I mentioned about R&D. That was a great example. So it's not just down. That's the point I've been saying right through. It is actually just realignment. Now, realignment can mean anything. Can mean up, can mean down, can mean flat also. Okay. So I think that's the only thing. A couple of things I can think of.
Great. So,
and the second question was on.
Yeah, the second question comes from Mr. Upendra Jala, and he's asking, what are the main 10 things, and we did not necessarily give 10 things, but
yeah,
the main things every entrepreneur should take care of in his business?
Okay, because I take it that it is due to this COVID, so I'm contextualizing that to any black swan event. So it need not even be COVID; it could be any black swan. I think, Sunshine, the first question you ask. I think replan and reassess what you're going to do in the next 6 months and over the next 3 years. You may also take a call not to do what you're doing, close shop and go. Not a bad idea if that's what you think. Some companies can actually do that. But otherwise, if you think the impact is time bound, how you can survive through this time, that would be the second. And their cash management, the second question you asked me becomes important. How do you survive? And I use this term self-financing. Self-financing is not putting money. It is saving money through cost cutting, getting your customers to pay up, maybe offering them some kind of a discount, or working out very interesting credit line. How do you utilize some funded credit line of bank? Can you make it BG or unfunded and LC, and then give to your vendors that instead of paying him hard cash? So there are very interesting ways of this cash management there. That would be the second and third. But one very strong point that is kept coming throughout is certainly look at newer channels, newer ways to service a customer, and probably diversified product also. Using Ritesh's example, that he was rendering ABC, and now the customers are asking him, the blockchain and things like that. So look at new opportunities which are coming. And for that, you don't have to spend actually. There's no money. You don't spend money for looking for opportunities, right? Every R&D is not a spend R&D. There's a lot of secondary research available, a lot of data available. You can talk to people. So you don't spend anything and you get immense amount of a wealth of information. So that would be the third. And innovate. That will be 4, 5, 6. Innovate. And an unpopular thing, which I kind of connects with the second point on cash management, try to save as much as possible and try to stagger things, which are, especially the costs, and be slightly investment unfriendly, if I can put it that way. And I don't mean investment in research. I don't mean investment in brand. Relook at your marketing. For example, nobody is buying newspapers. I'm just giving an example because of tax. Is it wise to spend a lot of money in print media today? I don't think so.
Correct. Yes.
Okay. So like that. So save where you can save, even if it is half a rupee, it is important.
Right.
So I think these are some of the points. I couldn't give all 10, but
as we reach 4 p.m., I'll have to ask the organizers, are we allowed to answer a few more questions, or do we hand over the mic to you?
Yes, Mr. Sanchayan, you can definitely have the last round. We can then afterwards take it up. Yes.
Okay, brilliant. So I think a few more questions coming in as we speak. And this question is from Mr. Devendra Chaudhary to Ritesh. And Ritesh, the question for you is, the skill development initiative launched by the government has not achieved much, is the view of the participant. What steps should industry take to drive this forward in a more effective manner so that India doesn't remain an inadequately skilled country?
So the skill development part of the government has not reached to such a wider audience as and in a media as it is shown. But I can assure you, if you go to the remote places, I'll give you one example where I went. I went to a place called Ranchi. It is the capital of Jharkhand. Now, if you compare Ranchi, which was 10 years back, versus Ranchi or Jamshedpur in Jharkhand, which is now, you see lots of people who are doing apprenticeship, lots of small scale industries of Jindals, where people are not Bs, people are even the people who have done graduation, just passed out graduations, they are getting jobs. So the impact may not have been seen in a big cities like Mumbai, Delhi, but if you go to the remote villages, remote cities of Madhya Pradesh, Jharkhand, Bihar, Tamil Nadu, you will see the impact there. And I think that was the whole purpose of the government's program. Now, coming to the individual ones, I think we have lots and lots of material on net for everyone to do self-study. For example, if you have seen the news, Azure certification just day before yesterday has been reduced from around $800 to $39. So that is the cost part of it. While if you go to the Udemy, if you go to the other apps and from your phone or net, there are ample avenues available. So I think it's about the bandwidth and about the attitude, and it's about the personal desire to get trained. I had no knowledge about blockchain 2 months back. I didn't even know the spelling, but with the customer needs, I had no option. If I have to survive and if I have a personal interest, I have to learn. So I went through the Udemy courses, learned through it. So I would recommend and suggest everyone to learn, because IT is not going to be same of a vanilla .NET, vanilla Java. It's going to change every day. So that's my answer.
Okay. We have a question from Rushali Goel. I'll direct this question to Narayanan. And Narayanan, you're yourself an MBA, so this is an MBA related question. What are the job opportunities for MBAs now? So much talk about tech and design and all the stuff. Wes, what can MBAs do special?
So and logistics, etc., which create a lot of jobs, right? But ultimately, what are they doing? They're all doing business. And what does MBA stands for Masters of Business Administration? I last heard. So I think MBAs basically need to be at the initial stage a little bit sector agnostic. You may want to get into branding and FMCG only. Okay, maybe this time it may not be so bad, or you may have a view of getting into a bank only. But if you keep yourself a little bit more open, I think the highest number of jobs that are always possible in any country is in sales. And it is best to, and I started my MBA career with HCL in absolute selling laptops and PCs. And I did that for almost 1 year because you need to understand the ground realities before you plan strategy from 30,000 feet. So obviously, I don't have any particular reference of how many years of experience this MBA is talking about. But if you're talking about MBAs, I would say ultimately in the first 3 years of your career, try and understand what business is all about. That should be your objective. And with that in mind, be sector agnostic. There are sectors which have reduction in the number of jobs that they have to offer, but there are sectors which may not be glamorous, but which would open up opportunities. Healthcare, logistics, to some extent even IT. There would be opportunities, and you need to just learn in the first 3 years of what business is about. That's what I think they should be doing.
Right, and probably the last question, and then again I'll check with Peter, but a question has come in. I'll take that question. That's from Vineet Sahu, and that says, how are HR skills going to change post-COVID? So I'll pick up from what Narayanan said. COVID, no COVID, at the center of everything is the customer or the consumer. Whether you're in HR or in sales, you need to understand who's your consumer and who's buying the products of your company. If you understand your consumers well, you will very easily understand what kind of talent you need to onboard in your company and what kind of talent you need to retain. So be very, very close to the consumer, even if you're in HR. Be very, very close to business. And the new term nowadays is HR business partnering. So which I think is all about understanding who's your customer. Have a certain amount of compassion in you. As I said, be cruel to be kind, but when you're cruel, try to be compassionate and try to use as much as data use. HR needs to take more data-driven decisions to come across as fair and also be fair to its employees and the audience base. So that's from all of us, more or less. I've taken some copious notes listening to Ritesh, Narayanan, and Mani. I'll try to put that together and I'll either tweet or do a LinkedIn post around it. So wonderful learning from me, and nice meeting Narayanan and Mani once more, and nice getting introduced to Ritesh. I will now hand over to Peter for the next steps.
Sanchayan, thank you so much, Sanchayan. So well.
Yeah, thank you so much, Sanchayan, for felicitating it so well. And thank you, panel members, Mr. Narayanan, Mr. Mani, and Mr. Ritesh. It has been a pleasure being with all of you today, and we had an insightful webinar. Thank you so much for taking up significant number of questions and sharing the entire insightful knowledge with all of us. Thanks for making this journey so memorable one. Before we conclude today's session, we would also want to thank all the association for supporting HRAI event. First, Geisha IT Association. Geisha is the ICT window of Gujarat to the world and nurtures, fosters, and tracks the ICT industry of Gujarat. It is the only state-level association for electronics, software, IT, ITES, BPO, KPO, LPO, telecom, networking, and IT education, which is recognized by the government of Gujarat. Federation of Gujarat Industries. It was founded in the year 1918. It is one of the oldest active, socially conscious industrial associations in the country. The Federation of Gujarat Industries aimed at promoting, protecting, and projecting the interests of industries and also catering to the needs of the community at large. NASSCOM COE Gandhinagar. It was announced by Prime Minister Narendra Modi in July 2015 as a part of Digital India initiative to jumpstart the IoT ecosystem, taking advantage of India's IT strength in the country. The Center of Excellence of IoT India at IIT Gandhinagar, Gujarat, is a Digital India initiative to jumpstart the IoT ecosystems in India, taking advantage of IT strengths and help country attain a leadership role in convergent area of hardware and software. Bharat Nirman was set up in early 1980 and was registered as a charitable and public utility organization on 9th June 1990. The main objective with which the society was set up was to revive all ancient Indian science and propagate India's way of life, culture, and development. Lucknow Management Association. It was formed as a local chapter of AIMA in 1976. Establishment of IIM at Lucknow in 1984 gave flip to LMA's endeavors in proliferation of management knowledge and making the management movement forward. Thank you once again, dear panel members and our participants, for joining us today. With this, we hereby conclude our today's webinar. Thank you so much. You all can log off now. Thank you.
Thank you.
Thank you.
Thank you so much, Sanjay.
Thank you. Thank you.